What do you think of when you hear the word budget? Boring? I'll bet you'd rather watch reruns of Law and Order than delve into a municipal budget, right? I'm hoping that after today, you and I will be more willing and empowered to approach the budget our local government presents, seek and find critical information, ask probing questions, and assess our own priorities by seeing how we spend our hard-earned tax dollars. My guest today is Leon Potok, a longtime member of the Village of Mamaroneck Budget Committee. I've asked Leon to show me some tools and strategies to help us approach a municipal budget with confidence. I'm Alice Bloom. This is A Town in Village 2. Welcome, Leon. Thanks so much for being my guest. For what I've asked you to do something extraordinarily difficult, and that is to take a very complex document, a budget, in this case we're using the Village of Mamaroneck budget, and help us understand. First of all, I know you've got wide experience on the Budget Committee and in your professional life.
I'm a financial analyst. I review and I analyze accounting information to make sense of it.
Okay, so for you, this is a piece of cake.
Relatively.
Okay, yes. Well, you're going to help us make sense of it too. When the village starts the budget process, who gets the ball rolling?
The responsibility sits with the village manager in the village administration, and his deadline for producing a tentative budget is March 10th of the year, and it's for a budget that begins June 1st. So he starts in December, January timeframe working with department heads, the heads of each of the departments in the village, with guidance from the mayor and the trustees to develop individual budgets, which he then puts together for presentation to the trustees by March 10th.
So he talks with the department heads and and they tell them what they want. They have their wish list, I'm sure.
They go through, typically would be looking at last year's budget, what they actually spent, and justifying any increases and challenging any increases or even the status quo to try to get to a target number in terms of expenditures and, in some cases, revenues.
Okay. Does a mandate go out to the department heads saying, look, we've got to cut 5%, 10%, whatever the village manager feels we have to do?
It's up to the village manager whether he wants to give a mandate across the board or mandate individual targets for each department. That's up to him. Okay. And he's mandated, in effect, or guided by the mayor and trustees as to where they want to end up. And inevitably they end up with a tentative budget that has some increase in the tax rate. And then the process from March 20th until May 1st is to actually finalize a budget that gets adopted. And it has to be adopted by May 1st.
Okay. So the village manager has worked with the department heads. When do they bring the Board of Trustees into it?
The Board of Trustees receives the budget document by March 20th, and they're required to meet publicly by March 31st to review it and discuss it. They then, typically in the village, the village administration and the trustees then coordinate meetings with individual department heads over the next 4, 5, 6 weeks. So okay. Each of the department heads come in and present their individual budgets, and these are public meetings to which the public is invited, and the budget committee members are invited to participate as well.
Okay, so the budget committee is an advisory committee.
Correct.
So you listen to everybody's pleas and you watch the give and take. At what point do you make some input?
What we have veered towards is less of an input for individual departments for individual items, although we will ask questions to try to understand how the departments operate and to try to understand what is in the budget for individual departments. We have more focused on the larger picture in terms of how to report the budget and how to report the financial statements such that they're more, to use a common word, transparent to residents, to taxpayers. And so we've worked on how can the budget be prepared and presented in a way that makes it more accessible to people.
Okay, so what I'm hearing is you'd like to see some improvements in the presentation method,
right?
If possible. What would it take to make that happen?
It takes a commitment from the legislative body such that it's a priority for the administration, because that's who actually carries it out. And the administration needs resources to be able to do the additional work of analyzing and presenting information in a way that's transparent. It doesn't happen by itself.
So what we're saying is we need more people, and it would be more costly to do that.
Typically, you would expect it to be somewhat more costly, or a shift of priorities. And that's something that has to be weighed by the administration and the trustees, where the priorities are for the people, for the departments that would be involved in presenting information in a more accessible way. And if whether or not priorities can be shifted, or whether additional resources need to be allocated.
So in a perfect world, if we had those resources, we'd have something that's a little bit more accessible.
Yes.
A little more transparent. Okay, it's not a perfect world, and everybody's really struggling for the dollars these days, for sure. Now, you've told me that the budget looks forward.
Correct.
We predict what we will be able to spend on various items. There's something that we should be reading in tandem with the budget.
Right.
And what is that?
That's the audit report. It's a report that's prepared by management and reviewed and, quote, audited by an outside accounting firm. Whereas the budget looks ahead and projects out revenues and expenses for the coming year, for the next, in effect, 12 months, starting a month from the time the budget is adopted. The audit report is generally submitted about 6 months after the end of the fiscal year. So for fiscal year 2011, which began June 1st, 2010, ended May 31, 2011, the budget was adopted in end of April 2010. The audit report for that same period will be submitted to the public at the end of November of this year.
Okay, so the audit report is like a report card?
It is a report of the actual, what actually happened, and it's a more complete record than what the budget, because the budget is restricted to what's called the general fund, which is the fund that otherwise receives all revenues and expenditures that don't otherwise are required by law to go into other funds, and we will talk about what those other funds are. The audit report gives a comprehensive view of all the funds, and it does it in the same format as the budget report is prepared, which is called a modified accrual basis, which is roughly a cash basis. Cash comes in, cash goes out. It also provides it on a full accrual basis, which recognizes revenues and expenses when they are, earned and received.
Okay, so for a citizen who's trying to access the budget and trying to understand it, that person should read not only the budget, but should be also looking forward to the 6 months later.
6 months after the end of the year, not 6 months
after the end of
budget.
the year, to review the audited statement for a comprehensive look at how the municipality is spending its money and whether their projections are reasonably accurate.
Right, and when they look at a current year budget, to look at what information we have about the past that could inform them about how good the budget numbers are and what it is that they leave out, really.
Okay. While we're waiting, I think we're going to start with what you call Exhibit 2. We're going to take a look at that. So while we're queuing that up, I want to ask you a question about the reserve fund. That's always mentioned, and rainy day fund, I think it's sometimes called. And it's an amount of money that a municipality must keep on hand, just as we do in our personal budgets, keep on hand for expenditures that were unpredicted. How do we know, well, first of all, how much should a municipality keep on hand?
Okay.
Are there rules about that?
Well, the reserve fund is the surplus in the general fund. That's what it is.
Okay.
It's the difference between the assets, which are largely cash, in the general fund, minus the liabilities in the general fund. And the reserve fund is really refers to the surplus that is unreserved. There's part of the surplus that's encumbered. So the unreserved portion of the general fund surplus, people say the General Finance Association organization says you should have 2 months worth of unreserved surplus available in surplus. Others say, which would be about 16%. Others look at more of a 10, 11, 12% as an adequate level.
So if we look at our budget and we see that the reserve on hand is between 10 and 15 or 16%, we say that seems okay.
Yes.
We're comfortable with that. If the reserve dips below that, then we say we're on thin ice here?
Well, it is a reflection of what kind of resources you have. It's like resources in your bank account that are available to pay for unexpected, expenditures.
Right.
And
but it means we're on treacherous ground here.
It's not treacherous. It means you should plan to
build it up.
Build it up.
Okay.
We've had years in recent years where it's been below 10%. It's been 7%. No great crisis occurred, but we built it up from that point on.
Okay. And if we see our reserve fund dwindling, if we see a pattern over the last 4 years of the reserve getting smaller and smaller, what does that tell us?
It tells us we have less of a cushion, but it has to be looked at in the larger perspective of what's happening, why it's declining.
Okay.
Because part of why a reserve can shrink, is because you're paying back debt. The debt is not in the general fund, it is sitting elsewhere. And so if you're paying it off, you are in overall better financial situation, but the general fund is in slightly worse situation.
Okay. Shall we pull up an exhibit and you'll sort of walk us through some of the numbers?
Sure.
Okay, so do we want to start with Exhibit 2?
Let's do Exhibit 2.
Okay.
And so Exhibit 2 takes 3 years of actual results from the audit report, and this is just for the general fund. So it takes fiscal year 2008, 2009, 2010, and then it shows what the adopted budget's numbers for 2011 and 2012 were. So we'll focus on 2010 for now. Revenues in fiscal year 2010, actual revenues were $21.6 million. That's the first number under 2010. That's 21,620.
Okay.
That's from property taxes. The general fund also received almost $6.7 million in other revenues, things like sales tax from the county, fines and penalties, parking revenues, and so on. A total of 6.7. So
any other money that came into the village would be
right.
in that category. Okay.
So in total, the general fund received $28.3 million, $28,290 is the actual number. In addition, the general fund recognizes as revenue receipts from issuance of debt. In 2010, the village issued $1.4 million in debt that was received by the general fund. So the total cash inflows were $29,690,000.
Okay, so the proceeds from the debt issuance were
$1,400,000.
Okay.
So that's how much revenues we had to work with. Okay, we can compare that to 2011. The total budget which is the very next column, has total revenues of $27,950,000, but that budget did not include any proceeds from borrowings. Okay. The proceeds from property taxes for 2011 were budgeted at $21.5 million, so an actual decline from fiscal year 2010 of about $100,000. And that's even though we had a small tax increase in that year. The reason taxes went down was because assessed values declined, and therefore there was a smaller tax base, and therefore we needed to raise taxes just to stay even in terms of total revenues received. And we continue to see assessments going down because of tax refunds and challenges from residential and commercial property owners. So the next set of numbers to look at is what was actually spent, expenditures. So the key categories that we have are general governmental support, where we spent $4.3 million. And
does that mean running our government salaries and
it's running our government
paperclip and every
for specific departments, that are not otherwise covered below. So so we'll go through, and then what's not described below is what goes into general. I mean, it includes the mayor's office, which is small, the trustees,
all the administrative offices,
clerk
and the
treasurers, the village manager's office, things like that.
Okay.
The next item is we actually had to pay $580,000 in tax refunds for tax certiorari settlements. That was cash out of the general fund. Public safety, which is substantially the police department and a small slice for the fire department, which is, it's small because it's a volunteer department, came to $8 million. And this is all the salaries for people in those departments. It does not include benefits. The next item is transportation and other. After that, $1,730,000. Culture and recreation, $1,600,000. Home and community services, almost $2 million. And then a big line item of employee benefits for all the employees of the village. The total came out to $5.5 million. And that includes a little over $2 million, about $2 million for pension contributions. And the other big item there is healthcare insurance. But it's all items. And the last one is interest expense, what we actually paid in interest expense. So the total out of pocket before two items I'm about to talk to came to $24,530,000.
Okay, so to back up for 1 second, if you want to see how your municipality spent its money, how your government spent the money, you look here and you can see what was spent on safety, what was spent on just running the government, general costs, what was spent on health care and benefits and salaries and things like that.
And the budget document goes into great detail about on all these items. Well, and the audit report has a schedule in the back that also shows the actual expenditures in detail. It breaks it down substantially more than what we show here.
Okay.
And the audit report actually shows not just what was actually spent by line item, but what was budgeted for that line item.
Okay.
So for 2010 and the three prior years, we also had an expense. We also spent money out of the general fund for judgments and claims. In 2010, 2009, those are largely result of the Westchester Day School settlement. That's when those were paid. In fiscal 2008, it's $2 million for Westchester Day plus $550,000 for the day labor lawsuit.
Now, of course, this just generalizes, just as judgments and claims. If somebody wanted to know what those judgments and claims were, how would they find out?
They'd have to ask the administration.
So they'd call the village manager's office and ask. Okay.
Or send in a Freedom of Information Act request. But it's not anything that they're trying to hide. It's simply not reported at that level of detail.
Okay. Would you like to see that reported here? Would you like to see that kind of information?
I mean, it's big numbers, and it's not. And if you ask, you find out.
Okay. Good enough.
I mean, I think it would be useful for people to see where actually the money was spent.
Okay.
And the point about 2010, 2009, 2008 is, in fact, those were all cash outlays that resulted from actions that took place in prior years.
Right.
That's why it really should not be charged against those years' budgets in terms of evaluating how well did we budget, how well did we spend in those years. It's decisions were made in prior years that resulted in
the
lawsuits and costs that were borne in later years.
Right.
The last item is debt repayment, which is also an expenditure. So the total of judgments and claims and debt repayment came to 2.9, and therefore total expenditures as reported in the budget is $27,450,000.
Okay.
And that represents a surplus of $3,760,000. For fiscal year 2011, we budget for a surplus of $480,000.
Well, that's a significant difference.
Correct. Now, we need to qualify that comparison. What we will find, I expect, is in fiscal 2011, when the actual numbers come out, we will do better than the 480. I don't know, but in 2010, we did substantially better in the actual than we did in the budget. So the last item is, and then from here, there are transfers that go into the other funds.
Okay.
Which we're not showing here.
Okay. Now, I think it was important to say that the budget looks at the general fund.
Correct. And only it reports the general fund, the water fund, and the debt service fund. Those are three funds. And then there are two other funds, the capital projects fund and some special purpose funds. But the capital projects fund is the other fund that we have to pay attention to.
Okay. And that would or would not be in the budget?
It is not in the budget.
Not in the budget at all.
There's a schedule of potential capital spending going forward. The same schedule shows what was actually spent on individual projects looking backwards, but it's not a capital budget that is reviewed and approved by the trustees. We generally approve things on a piecemeal basis through the year.
Is that a good way to proceed?
It would be better to have a capital plan, a long-term capital plan, so we know what it is we evaluate what it is we need and we budget for it in a way that looks at a long-term basis, not simply year to year. What are we going to spend this year or the year after?
A comprehensive plan.
Right. Where one evaluates what are the capital needs, what infrastructure needs do we have, what will it cost, and what are our priorities.
So that's a plea that citizens can make of our Board of Trustees. Let's make that kind of plan, that kind of program, so that we can replace equipment, so that we can plan for big projects.
Yes. I mean, generally equipment is budgeted. We know how long sanitation trucks will last for. We estimate how long they'll last for. But when it comes to planning out all the infrastructure in terms of the buildings we own, how much space do we really need in the village? How much space should the village occupy, and which ones should be upgraded? That's something that is not budgeted long term.
Okay. Now, at one point in our talks, you showed me a correlation between capital projects and the reserve fund. Was that in?
Sure.
Okay. I don't want to throw you off track, but
no, we can go there.
It was a useful tool.
We can go there. If we go to exhibit number 5.
Okay, so we're going to be bringing up exhibit number 5.
The purpose of exhibit number 5 is to show how much have we spent in the last 5 years. And in one of the schedules in the audit report, there's also an expense called depreciation, which is an accounting calculation of how much value depreciated over the year. So if you buy a car, you expect it to last 10 years, you depreciate it over a 10-year period. And so we do as well in the village. For all the assets, we estimate the useful life, and then the accountants amortize the cost over a period of time.
Okay.
So on exhibit 5, what we look at is how much was actually spent over the last 5 years, in the last 5 years, actual years, fiscal years 2006 to 2010. And the total, which is next to the last column, shows that we spent the first row is how much was spent out of the general fund. So the general fund includes expenditures for capital, not just operating items. And the total spent in 5 years was $2,430,000. The average for the 5 years, and we'll just focus on the average column, which is the last column, it was $490,000 was spent out of the general fund for things that were then capitalized. In addition, we spent $4.6 million on average over the last 5 years from the capital projects fund. Okay?
Okay.
So the total spent was almost $5.1 million on capital. We then received state and federal aid in the form of grants, which averaged $700,000. So that's what we got help from the state and federal governments to pay for all this, things like street paving and so on.
Okay.
So the net that had to come out of the village, had to be paid for by village taxpayers, was $4,370,000 on average over the last 5 years. Now, we had a big expenditure for capital during this period. It was for the Palmer Avenue Firehouse.
That's right.
So the total for that 5-year period was $9.4 million, or an average of almost $1.9 million. So if we say Palmer Avenue Firehouse spending is a once in a, call it a lifetime, how much do we need for everything else? The average would work out to $2.5 million. And the last row shows the average depreciation expense for the 5-year period, which is about $2.4 million. So that suggests we should be spending on average $2.5 million just to keep things as they have been.
Okay, that's what we should be spending. And how do you relate that to the surplus or the reserve fund?
It's a different schedule that we won't find when we look at the general fund. That's why the general fund has its limit. When only looking at the budget for the general fund has its limitations.
Well, how does a citizen know if we're generating enough surplus in the general fund to justify capital expenditures?
Well, why don't we look?
Okay, let's look.
If we have two schedules, and I'll run through the first one is Exhibit 3.
Okay, let's try to bring up Exhibit 3.
In Exhibit 3, what I try to do here is to show all the funds that, as well as the general fund, on a consolidated basis, using the same accounting method as used for the general fund budget. Okay, and so if we look at the first column, it's a general fund. It's what we looked at before.
Right.
And this is for fiscal year 2010 where we have actual numbers. So the total surplus as reported for 2010 before transfers to other funds was $2,240,000. It's the third row from the bottom.
Okay.
We then transferred $470,000 from the general fund to other funds. We transferred, looking across that next to the last row, $120,000. Well, we transferred out of the water fund, which is the next column, $120,000. And the recipients of that $470 and the $120 were the capital projects fund for $570,000. So we transferred money out in order to fund expenditures, cash outlays out of the capital projects fund. In total for the entire village, all the funds, the fund balance on a consolidated basis increased by $1,180,000 using a modified, in effect, cash accounting basis. People will correct you. It's modified accrual, but it's very close to a cash basis.
Okay.
The next schedule, which starts with this last column in Exhibit 3, we look at Exhibit 4. It starts with that first column, and $1,180,000 is the increase in the fund balance as reported using this modified accrual basis. We then take it and we make modifications to make it equivalent to what a private sector company would do, which is report its finances on a full accrual basis. The adjustments we make is we deduct as an expense depreciation expense, and we see that as $2,570,000, and we back out the capital spending that came out of the general fund and the capital projects fund. So our expense actually goes up by $1.7 million because the depreciation expense exceeded the capital spending by $1.7 million.
Okay.
The next row backs out borrowing and debt repayment. The fourth row is addition of non-cash employee expense benefits. This is $1.6 million that the accountants tell us we should accrue for employee benefits that will be paid in the future. It is essentially retiree health benefits that we're not fully funding in the current year. So moving across to the very last column, the bottom number is a deficit, a decrease in the fund balance of $1.6 million. Okay, I'd make two qualifications to that. Is that good or bad? And those two qualifications are, it's a deficit of $1.6 million after paying $1.4 million in judgments. And if we expect to pay $1.4 million in judgments year in, year out, then that's sort of a going, steady deficit that we're running.
Right, but we're hoping
that's not going to be the case. Right. The second is in the water fund, which we skipped over very quickly before in Exhibit 3. We ran a deficit of $1.3 million in the water fund, and it's attributable to $1.2 million in fines that were accrued for the whole controversy, the whole legal case around the water filtration plant. So, legally, we are subject to a fine that accrues in total for all 3 municipalities covered by the water board. Okay.
So, but that's a one-time thing, or will that be?
It's every year until we settle it.
Until we settle that.
And if we settle it by having to pay for it, then that's a real expense.
Leon, this is so complicated. If there is one bit of advice that you would give to a citizen who's approaching the budget, what would it be? We have less than a minute left. What would you tell a citizen who genuinely wants to understand?
I think they can learn about how the village operates, how the departments operate by attending the meetings as part of the budget process. They can learn a lot. They can review the budget document, and as much for description as much as for the numbers. And the budget document has a lot of those numbers.
And that will back up and give you so much more information than what you're going to read in the hard number.
Yeah, they will better understand what's being budgeted. But beyond that, I think it's really up to enhancing transparency by having better reporting of the information.
I think it's
important. Can only be done by village administration.
And I think it's important to note that the budget is on the website.
Yes.
It will be. It always is on the website.
Yes.
You can always access. There are probably copies at the library. You don't need a copy of your own, probably, unless you want to use it for weightlifting. But you can always call Village Hall, call the village manager for further qualification. Leon, thanks so much. I've learned a tremendous amount. At least I'm not so scared of the budget anymore. Thanks so much for watching. I'm Alice Bloom. We'll see you next time.